Good morning, everyone, and welcome to the press conference following the Eurogroup meeting, which just took place here in Stockholm. We're going to start with President Donohoe giving us the key takeaways of the meeting, and he will be then followed by remarks by Commissioner Gentiloni, the ECB President Madame Lagarde, and the ESM Managing Director Pierre Gramegna. President, the floor is yours.
Okay. Good afternoon to you all, and you're all very welcome to Stockholm. And I want to begin by offering a word of thanks to our Swedish hosts for the excellent organisation of the event. And what I'll do is just give you a brief summary of the key points that have emerged from our Eurogroup meeting this morning. We often begin our meetings by reflecting upon the policy developments and the economic developments that have taken place since we last met, and today was no exception. So we began our meeting by focusing on recent developments that have taken place in the United States and in Switzerland, and what are the implications of that for our economies and for our banking systems. And we also reviewed the indicators of economic performance over the last number of weeks and what that means for our policy decisions in the time ahead. There are some lessons with regard to what has happened with banking issues that stretch beyond the euro area, and this is the reason why we had our non-euro finance ministers attending today. Many of our institutions also discussed recent developments, because in addition to the Commission, to the ECB and to the ESM, we also had the chairs of the Single Supervisory Mechanism and the Single Resolution Board in attendance, and also the chair of the Econ Committee of the European Parliament. We also welcomed a new member of the Eurogroup, the new Finance Minister for Estonia, Martin Verklava, to our meeting, and he gave a brief presentation on the priorities of the government of Estonia. So it's the speed with which recent events in the financial sector have unfolded is a key theme that emerged from our discussion today. When we met a number of weeks ago, the Commission, the ECB, had already debriefed us on issues that were taking place within America and some of the consequences of this for our wider financial system. And then closer to the euro area, the developments that took place with regard to the merger of Credit Suisse with UBS was also a key area of focus. But in acknowledging the speed of these recent developments, all ministers and all those who contributed this morning also acknowledged the fact that our banking system remains resilient and it remains stable. And this is because strong rules and strong supervision are the first line of defence, and the work that has happened now over many years with regard to the regulation and the resilience of our banking system proved so valuable over the last number of months. But still, recent events have reminded us of the work that we still need to do, and this is why we looked at further steps regarding how we can make our system even more resilient, with two key priorities, of course, acknowledged. The first one, looking at how we can continue to deliver against our commitment that the European Stability Mechanism can provide the liquidity backstop to the Single Resolution Fund, and the importance of that work. The second phase of how we can deepen our resilience is responding back to the Commission proposal with regard to reviewing the framework for crisis management and deposit insurance schemes, targeting in particular the small and medium-sized banks within the European Union. And we will do all of this work because while making the case for the rules, the framework that we have in place at the moment, we also know we need to continually upgrade our framework for how we could manage banking difficulty, which is why I very much welcome the huge work that the Commission have done now since our agreement in June to bring forward the proposal, because I believe that moving forward on those areas of progress and deepening and strengthening our capital markets is vital to not only how we can manage risk, but equally vital regarding how we can deepen our ability to invest in a better future for our citizens. So now is the time to proceed. Now is the time to move on with the really important legislative negotiations that will now be starting immediately within the Council. And I made the point to all of my colleagues here today that in our statement of last summer, we had committed ourselves to completing this work inside the current legislative cycle. Today also, I debriefed my colleagues on the Euro Area Summit that myself and President Lagarde attended and emphasised the focus that all of our leaders put on how we can deepen capital markets union, and the Eurogroup will return to that work very shortly. So with all that said, I now hand over to Paolo.
Well, thank you very much, Pascal, and good morning, everyone. Let me start with a word on the very latest economic news. As you know, in the last hour, we have had the preliminary flash GDP data for the first quarter of this year, and the figures are somewhat better than expected, at least by our forecast. The euro area economy appears to have grown by 0.1% compared to the fourth quarter of last year, and the EU as a whole expanding by 0.3%. So in our previous forecast, we had projected stagnation in first quarter for both areas. Among the largest EU economies, better than expected results are especially there for Italy and Spain at 0.5%. So this is encouraging news, which shows a European economy that continues to show resilience against a challenging global backdrop. Declining energy prices have been bringing down headline inflation, which fell to 6.9 in the euro area in March, the lowest in a year, though, as we know, core inflation is taking longer to turn the corner. Labour markets remain strong and unemployment is at record low, unemployment at record high. Nevertheless, we must continue to work to make our financial system even more resilient. Sorry, I am in the wrong page. We also have to work to make our financial, economic more resilient, but public finances have been improving. The government deficit in the euro area was 3.6% in 22, down from 5.3 in 21, while public debt came down further from 95.5 to 91.6. So it is still quite high, the debt in the euro area. To maintain this progress in 23, we need to see a phasing out of emergency energy subsidies. You have heard this previously, starting with those measures that are less targeted. We, of course, need to remain vigilant. Economic uncertainty remains high and we face numerous headwinds. The recent turbulence in the banking system has underlined the importance of strong risk management and effective regulation and supervision. Events in the US support the EU's choice to apply the Basel prudential standards to all our banks, not just the largest one. We heard this morning from the ECB and the chairs of the Single Resolution Board and the Single Supervisory Mechanism, crucial bodies that we put in place in the wake of the financial crisis. We are able to act credibly and swiftly to preserve confidence whenever needed. Nevertheless, we must continue to work to make our financial system even more resilient. And this is the aim of the proposals the Commission adopted last week, building on the experience of the past few years and on the basis of the mandate of the Eurogroup in June last year. to improve how we manage bank failures so that we can better safeguard financial stability and protect the taxpayer. Completing the banking union remains a priority for the Commission, and we fully support all the effort that Pascal is doing in this direction, including the discussion on a common European deposit insurance scheme. Let me conclude with a word on a topic that was not formally in our agenda this morning, our economic governance reform proposals. These proposals, as you know, are the outcome of extensive consultation. In our view, they are well balanced. They can provide our Union with a more effective and credible set of fiscal rules to deliver both sound public finances and stronger growth through investments and reform. Not an easy balance, but this, I think, is what our proposals are. I am confident that they are the basis for bridging differences and building a broad consensus. And this is what we will now work hard to achieve, because time is pressing. Thank you.
The floor now to President Lagarde.
Thank you so much, and good afternoon to all of you. Let me express also my gratitude to the Swedish presidency, which is hosting this summit in, well, actually near Stockholm. So as the ECB is entering, and actually we are in the quiet period, you should not expect me to say anything about the macroeconomic and financial development, nor anything about the monetary policy decision that we will take on Thursday. I can't do that, and if you ask me, I'll say terribly sorry. So, because I only appear once a year, actually, in front of you in this format, on the occasion of the informal Eurogroup and ECOFIN, I would like to say a few words on the topic that my colleague and friend Paolo Gentiloni has just broached on the legislative proposals concerning the economic governance reform, and give my full support to projects to which the President of the Eurogroup, Pascal Donoghue, has given so much efforts and energy and passion, which is those significant reforms to strengthen the EMU, namely banking union and capital markets union. So on the first one, which is the topic of the reform of the economic governance, the European Central Bank welcomes the publication of the Commission's legislative proposals, and we truly appreciate the Commission's effort to reach a compromise with Member States, because that is already, I'm sure, given the balancing act that you see in the documents, the result of multiple discussions. And it is clear that you will accumulate in the course of your interviews topics of differences and disagreements between countries, because they face different challenges. But let me just tell you 3 key points on which the ECB really values the work that has been done. So, first of all, compared with the current framework, we welcome the fact that the reform proposals aim for more national ownership, much more so than it is the case now. Number 2, there is a stronger focus on high debt levels and a medium-term perspective that also aims to set incentives for investment and reform. So to those who will say DSA, 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 bear with them, but also bring the topic back to the association of debt level and the medium-term perspective with the focus of investment and growth. Number 3, what the ECB also values is the stronger enforcement that is embedded in the proposal, stronger than what was embedded in the previous proposals, and obviously enforcement is essential. So more national ownership, debt and medium-term perspective, and enforcement. Those are the 3 characteristics which, from our perspective, matter. Now, why does it matter for us as the actor of monetary policy? It is important that the reformed fiscal framework delivers on 4 priorities from our viewpoint. 1, a realistic, gradual and sustained adjustment of public debt, just mentioned by Paolo Gentiloni. Second, reducing debt heterogeneity across countries. Third, incentivizing growth and investment. Four, enhancing counter-cyclicality. Those are the four key criteria that matter from our perspective as monetary policy. As part of the process, and as called for, the European Central Bank is preparing an opinion of the proposals that will be part of the overall process of the discussions. And I will emphasize only one last point. It is important for all of us, but particularly for monetary policy, that fiscal policy operates within a framework. We are without framework because of the escape clause that has been activated, and it is important that a framework that is thought through, that is negotiated, that will obviously be the result of a compromise, be in place as quickly as possible. Time is of the essence, and we know that the work has to be completed very promptly, and we will do everything we can to help in that respect. But of course, it's going to be for Commission with the Member States to try to arrive at something that will be satisfactory. Second point, banking union. And I will not repeat all the very valid point that the President of the Eurogroup has made. I will simply mention that Andrea Enria, my colleague on the SSM, part of the ECB, has debriefed ministers on development in the euro area banking sector, repeating that our banking sector is resilient, that our banks have weathered well the recent market tensions, that they benefit from strong capital and liquidity positions thanks to the reforms which have been undertaken for the last 15 years, and that nonetheless, our banking sector must be not only fit for purpose, which it is, but it must also be future-proof. And in that regard, obviously, work will continue to be done in order to address the needed financing for green and digital transition going forward. So in that respect, the ECB supports completely the Commission proposal on crisis management and deposit insurance, the famous CMDI, which we regard as an important part of a larger puzzle, or jigsaw puzzle, just to be certain that you understand my analogy, in order to protect taxpayers' money and depositors. And it is crucial in our view that this CMDI be adopted promptly, and that, of course, it will be the result of further work and, I'm sure, negotiations and compromises, as is so often the case. But it is a step towards what we hope will be the European deposit insurance scheme, which would be needed in order to complete the third pillar of banking union. Second, capital market union, and I will not expand at length about that one. It is certainly a topic that has called the attention of the European Council, and the President of the Eurogroup has reported to the group this morning that there is a clear mandate in order to provide all the necessary ingredients of capital market union in order to also complete the framework within which we all operate in that respect. It's long, laborious and enduring on the part of those who are showing huge passion and enthusiasm. So I would like to finish with a quote. I don't know how many of you in this room are Swedish, but I will use a quote by a Swedish woman who received the Nobel Prize, the Peace Prize, in 1982, Alva Myrdal. And she said, I quote, "I have, despite all disillusionment, never allowed myself to feel like giving up. This is my message today. It is not worthy of a human being to give up." This is her quoting this. I tell you, it applies to the President of the Eurogroup. He demonstrates that every day. Thank you.
Thank you, President Lagarde. And now the floor to the ESM Managing Director.
Thank you very much, and congratulations to Christine Lagarde to bring in a quote from Sweden, which I think is very appropriate. The European construction is something that takes time, and we need to be patient by definition. And I can assure you, we all on the stage, and I think many in our teams, all of our teams have that patience, and we make Europe progress step by step. I would like to join those on stage here to thank the Swedish government, and in particular the Minister of Finance for the warm welcome here in Sweden. I'm going to speak about two topics. First, a little bit the macroeconomic and fiscal developments, and second, about the future of the banking union. I would like to start by congratulating and commending our fellow EU institutions for their clear and credible communication during the financial turbulences in the United States and in Switzerland. The communication was all the more efficient because it was not only an exercise about communication, it was also highlighting the fact that Europe today is much more robust than in the past. And that is why the financial actors in Europe have weathered this crisis very well and were not affected. So we benefit from more robust regulations, a more complete architecture, and a supervision that is very effective. Our banks are more resilient, they have better capital than in the past, and especially they're much better equipped in terms of liquidity. That doesn't mean that we should be complacent, and I intervene to highlight a few risks that exist there, and one of which is related also to the risk of contagiousness or contagion, and that is the fact that obviously with social media today, when there are risks or withdrawals of deposits, it goes much faster than in the past. So in this context and in this aftermath of turbulences, obviously the focus on banking union becomes stronger again. I have highlighted in my intervention that in this context it is extremely important that the ESM backstop becomes operational as soon as possible. It was a topic that was alluded to by quite a few speakers. An effective and credible common backstop significantly enforces the confidence of investors and of citizens and is key to the robustness of our EU-wide safety net. Let me also underline that we have a timing issue here, as the current bilateral backstop arrangements will expire by the end of this year. So it is key that we have an entry into force of the amended ESM treaty with this backstop before the end of the year. So it is a timing issue, and the timing issue is important, particularly for the ESM, but time is of the essence also, and I would just allow myself to say one sentence about the new economic governance framework that was presented by the Commission this week. Time is of the essence because at the end of the year the escape clause will not work anymore, and I would like to say that as ESM we find that the proposal that the Commission has made is quite balanced and is, in our opinion, a very good basis for discussion and negotiations.
Thank you, and we open the floor for questions. There is a microphone who will be going around, so we can maybe take the first one.
Hi, Swedish television here. I have a question for Madame Lagarde, but maybe all of you could comment it shortly. Sweden has still their own currency, a pretty weak one, and you're here, but we are not part of the eurogroup. What's your comment on that, and is it time for us to join now?
You know, the euro area is a big family. It includes 20 members. The latest to join as of January 1st was Croatia. There are other countries that are lined up for joining. It's a big family, and we try to keep each other from multiple hardship and danger. So I think on balance, it's a very positive experience that member states have had. It's really a decision for the Swedish people, but we're waiting open arms.
Would it be good for Sweden to join, for the Swedish economy?
That is for the Swedish people to decide, not for me. All I can tell you is that for those who have joined, it has been a net plus.
Would it be good for the Eurogroup if Sweden joined?
The many are the happier, as the saying goes.
Thank you.
I'll comment on the Eurogroup point there, just to emphasise what President Lagarde said there a moment ago. Of course, it's a decision for the Swedish people, Parliament and government to make, but this is a currency that by growing has become stronger, and by having more members within us, we have deepened our resilience, and those countries who are in it, I know have found it a great source of safety in a world that we can see changing very quickly at the moment. But it is first and foremost a decision for the Swedish people, and we of course always welcome the Swedish government to our meetings on topics that are euro focused but can have effects on the Swedish economy.
Thank you.
May I maybe just chip in that by being member of the euro area, you also benefit from the protection of the European Stability Mechanism.
Good afternoon, Thomas Gallavotti in Kronos, Italy. It's just a question for Madame Lagarde, if I may. I mean, Italy hasn't ratified yet the reform of the ESM. Do you think that it would be good that Italy ratifies the reform? Thank you.
I think there has been a recurring call from the Eurogroup at large for ESM to join the ratification process, which has now been completed by all countries. So I would turn to my colleague Pierre, who is obviously very keen to see that process completed, but I think it would be good, because to have a backstop in case of difficulty would actually serve all members who have ratified.
So I'm just going to add to that because this is a topic that's been discussed at great length with the Eurogroup. Firstly, we recognise that this is a topic of great importance within the Italian Parliament, and a topic that, of course, is very important to the Italian government, and they're devoting much time to it. We understand that. It is very important to emphasise, though, that while fully respecting the decision that Italy may make never to access the strengthened capacity that would be created by the ratification of the ESM Treaty, we still need the ESM Treaty to be ratified so that other countries have the ability to access that support if they need it. And that is why this treaty is so important. It is about creating the potential ability for other countries to access the support that would be available through the ESM in event of a significant difficulty developing.
Thank you very much. Marco Bresolin, Italian newspaper La Stampa. It's a follow-up. My colleague question on this topic is a question for your President Donu. The Italian Prime Minister said that Italy want to open a discussion in order to change the ESM, I mean to reform the reform. Do you think that it could be the case that there is a need to open a discussion on that? And do you think that it may help opening this discussion in order to have the green light from the Italian authority? How do you think to proceed in this direction? Thank you.
So again, I fully appreciate the importance of this topic in public debate within Italy, and have the height of respect and understanding for the deliberations that are underway in the Italian government on this matter. It is, however, why we are so fortunate now to have the ESM led by Pierre Gramegna, because Pierre has already commenced consultation with many different governments regarding the future role of the European Stability Mechanism. And I know that what the Managing Director wants to do is, at the right point, come back to the Board of Directors of the ESM and brief us on the consultation that he is having with all governments, including the Italian government, regarding the different views that are there regarding the future use of the ESM. And I know that Italy will play a very important part in that debate. It is worth acknowledging that there are differing views regarding the future uses of the ESM, but Pierre has this process already underway. I know he is engaging with Minister Giorgetti on this topic, and I know at the right point Pierre will return to all of his colleagues to share the outcomes of this consultation and then allow the board of directors to respond back to it. I do, however, need to emphasise that as we look to a debate or discussion regarding whether the ESM has other future uses, it's why it's so important that we do implement the agreement that we have that is there regarding the future of the ESM. We did reach agreement on this topic in 2020. Really important agreements were reached regarding how the ESM could be reformed. And while fully respecting that any country may decide that they do not want to access the support the ESM may provide if we are dealing with a banking difficulty, it's still really important that other countries have the option to do it. And that is why the full ratification of this treaty is so important, and it will form a further step forward in strengthening our banking union. Part of a good debate in the future has to be that we implement the conclusion of other debates and recognise that other countries will want the ability to access the ESM if they choose.
Thank you.
Yes, thank you, Mark Beberkorn, Volkskrant Netherlands. A question for the ECB President again, I'm sorry. It's about the economic governance. You stressed the need of a gradual adjustment of the debt, but you didn't mention what they call a numerical benchmark. In other words, a fixed amount, a fixed percentage to lower the debt. Is it because the ECB thinks it's not necessary? And secondly, related, you also said, and I think you all 3 or 4 said, time is of essence, meaning at the end of the year there should be a deal. But if there is no deal, of course, the old rules will still apply. Is this really such a disastrous scenario, do you think? Thanks.
I think, if you don't mind, I'd like to share the question with my colleague, Mr. Gentiloni, because there are many factors that he's more familiar with. What I tried to do was to identify the key features and the direction. So when I mentioned the reference to debt and directionally the reduction of debt, which is considered and embedded in the proposal, the mechanism by which it happens, the safeguards that are associated with it, are things that obviously, are development to be discussed, to be agreed, that I'm sure will give rise to negotiations and compromises, but it's clearly not for the European Central Bank to discuss or approve the implementation mechanisms and safeguards. Okay? So it's not to say that it doesn't matter, it's simply to say that whatever will deliver on the direction that we ECB regard as desirable is obviously welcome, whatever form it takes, and whatever form it takes belongs to my colleague, Mr. Gentiloni. Time's of the essence, I think we all say the same thing, and we all know that the end of calendar year is important, given the political developments that will follow in the early part of 24. And the getting back to the old rule is not something that I have heard anybody regard as desirable. Neither do we, for that matter, given the objectives that I have mentioned as being desirable. With that, I'm happy to yield the floor and give my time to Mr. Gentiloni.
Well, thank you. Thank you, Christine. Well, on the first question, I don't think we have to elaborate too much on our proposal. You know our proposal, and our proposal, this is the reason why you were, I imagine. On the second, yes, of course, we know that the time constraint is also because of the fact that there is the general escape clause, which will be concluded at the end of the year. But overall, I think we have sufficient time if we are working seriously. I appreciate that all member states, all those that have quite different views from the one of the proposal of the Commission, accepted to engage in this discussion, taking our proposal as a basis. This is how it works. The European Commission has the right to the initiative. We built a proposal. Of course, we think it is a good one. We know that it is a balanced one. This is not an opinion. This is what it is. It is a balanced proposal. And now, if there is, and it is very positive that this is the fact, a constructive attitude to enter in this conversation and this negotiation from all member states, I think we have the time to reach an agreement.
Thank you. Next question.
Thank you. Angela Mauro, HuffPost Italy. Sorry, I go back to the ESM reform and the Italian case. Speaking of today, do you expect a discussion with the Italian minister? What do you expect from this discussion? And by the way, as he is late, are there any thoughts on his delay? Thanks.
So myself and Minister Giorgetti speak very, very regularly. And I understand he's dealing with with the kind of issues that every finance minister deals with regarding budgets. And I know he'll be joining us later in the day. And across the rest of this informal meeting and in the meetings to come, the Minister and I will continue to work together and engage with each other. I want to emphasise again the recognition that I have regarding that this is a sensitive matter, the strength of the relationship between Minister Giorgetti and the rest of the Eurogroup, and the desire that is there from all of us to get to a place that other countries are in inability to avail of this support if they choose to access it. And we've been reminded so many times in the last number of weeks that the credibility of how institutions can deal with banking difficulties plays a vital role in their containment and resolution. And our work with regard to the ESM treaty and now the work that we are intensifying regarding the CDMI proposal is all about how we deepen that credibility and protect the taxpayers and people of Europe from the costs of financial difficulty. So we'll be speaking to Giancarlo in the next few days and beyond that on all of the work that we're doing together.
And so will I, and I will reach out to Italy as I've done since the very first day I started. I have already had a meeting in Italy in January, and I will do a follow-up in the weeks to come, and I'm also in constant contact with Minister Giorgetti. So, I mean, we are fully motivated and reaching out to Italy to make sure that we can better explain the purpose of this backstop, which is really key in the light and in the aftermath of the financial turbulences that we have seen. Maybe just to say it differently, because the word backstop, obviously in English maybe is very clear, but basically what it means is that we double the firepower that we have at hand to protect us from financial turbulences.
Thank you. And with this, we close the press conference. We have quite a dense schedule, as you are well aware, so I think we need to move on. But thank you very much for coming, and have a lovely lunch.
Thank you very much.
Thank you.